In this Char Hub podcast, we speak with Paul Gilberd about the challenges of providing affordable housing, what recent policy announcements and developments mean to the sector, his thoughts on international examples, and his optimism about the future. Paul, thanks for joining us today. Affordable housing in New Zealand faces many challenges, none more so than the access to financing. Can you talk to the current landscape and structures?
Yeah, so the main structural financial problems or challenges that community housing providers have in the provision of new affordable housing supply are, number one, across the sector. So we currently at Community Housing Aotearoa have 100 members, and those members are actual providers of housing services. And when I look across those 100 different providers, from Invercargill to Kaitaia and everywhere in between, there's a lack of equity. And what that means in plain terms is that if you haven't got some wealth or some equity or some balance sheet, think of that in domestic terms as having a deposit for your new house. Usually that's around 20% in any given situation, regardless of if it's one family with one house or one of our largest providers with 1,000 houses. If they don't have 20% sort of as cash or equity to put up into the new supply deal, then they can't go and borrow money from third-party lenders, and especially the banks, because there are strict rules in New Zealand around loan-to-value ratios and these other things called interest cover ratios, which means that people are sure you'll be able to service the debt. One of the big structural problems for our sector as a whole in New Zealand right now is that we haven't got enough equity, so we can't borrow the money to deliver the new supply. That's one of the biggest challenges facing us at this point. The finance of new affordable housing supply has seen some really significant fluctuations in recent times, and at present we have a quite limited and quite narrow set of structured funding subsidies in the New Zealand housing system, and they're predominantly focused on income-related rent subsidised social housing, which can be provided by our providers, community housing providers, and or Kāinga Ora, the state provider. And then there are affordable rentals, and affordable rentals have a variety of definitions, but effectively in our community housing world, we would describe an affordable rental as something that's at or less than 80% of the median rent for that particular house in that particular area at that time. In recent history, there were far more options in terms of finance, and we've got quite a significant structural problem in the New Zealand housing finance system, in the sense that 70% or greater than 70% of all rental properties in the entire country are receiving one or more subsidies from the government. And these are things like the accommodation supplement. And so there's a huge amount of money spilling out from the government coffers to prop up rents, where the vast majority of that subsidy is really being taken straight off the table and going into the pockets of the private landlords who own those properties, who are paying off their mortgages and building up their equity whilst providing those houses as part of the mainstream private rental market in New Zealand.
What are your thoughts on the recent announcements by Minister Chris Bishop and also the new Community Housing Funding Agency?
Yeah, in November 2024, the Ministers of Housing, Chris Bishop and Tama Potaka, but particularly Chris Bishop, came to the Community Housing Aotearoa conference at AUT in Auckland and made some really quite significant announcements. The nature of those announcements is quite technical, because what they were effectively doing is, and Chris talks about it as levelling the playing field. So when he's talking about levelling the playing field as the Minister of Housing, what he's talking about is creating a more fair and equitable and balanced access to finance as between the community sector and the state provider Kāinga Ora. And so what he announced were a number of measures that will allow our community members to access lower cost finance at similar rates to those that can be achieved by Kāinga Ora. And there are a couple of ways that he's doing that. And he's done a tremendously good job, by the way, almost immediately, and delivered on those promises in the time since the conference up until now. So one of the things is providing a sort of a guarantee effectively to the banks who are lending on that asset class. And what that means is, because there's a guarantee from the government, that the risk is lower, and because the risk is lower, the banks are prepared to price their debt lower. So that's great. That's a really helpful thing. The other thing that he's done, together with Nicola Willis as Minister of Finance, is they've supported the Community Housing Funding Agency, which is a fantastic innovation in New Zealand terms, because it's new for us, but it's actually something that's been done very, very successfully in dozens of jurisdictions across the world, including Australia, the UK, Canada, US, Switzerland, etc. And so what he's done is he's providing an underwrite effectively to the newly formed Community Housing Funding Agency, which means they can go and get a credit rating, probably a AA from Standard & Poor's or something similar, which means that entity, the Community Housing Funding Agency, will have the capacity to deliver literally billions of dollars of low-cost debt to the community housing sector to support new affordable housing supply. So that's a game changer. It's genuinely good news.
I'd now like your thoughts on international examples of structural, financial and policy differences that allow them to be much more successful at providing affordable housing.
Yeah, sure. So there are some sort of poster children of future desired state in housing in the forms of Sweden and Finland, for example, where the governments have made really substantial commitments to new social and affordable housing supply at scale. And in those instances, there are a range of factors, obviously, that support that. And one of the big ones is their tax regimes are significantly different from the New Zealand tax system, where capital gains, for example, on residential housing are not a taxed activity effectively in many ways. And so they have a higher tax revenue, which allows them to have the finance and funding to deliver way more affordable housing. Nonetheless, they decided as a nation to treat housing, especially affordable housing for low-income families, as infrastructure, social infrastructure. And in the space of a very short period of time, in some cases close to a decade, there's been an absolute turnaround and in terms of addressing homelessness and precarious housing situations, such that, surprise, surprise, the total cost to government of homelessness and insecure housing, which manifests into the health system, corrections, police, social services, and all sorts of other costs that are attributable directly to somebody not being adequately housed, they're seeing enormously good results as a result of going with a sort of a housing first approach. Across the ditch, closer to home in Australia, there's been multi-billion-dollar investments made through the current government, Albanese's government, and in fact one could argue that the latest election in Australia just a few months ago was won on the issue of housing, where they're showing a very, very strong commitment to the unique role that central government has to play in delivering new affordable housing supply, and really the only ones that have the scale to be able to subsidise that new supply to the extent that those low-cost affordable houses actually get built. Because generally in the Western economies, if the central government is not commissioning affordable housing, it doesn't get commissioned because the market is designed for a different purpose.
So, what levers can we adjust, policy and structural, to help bring about more affordable housing here in New Zealand?
The longer I work in housing, and the more I realise there's no silver bullet. There are lots and lots of interventions and levers that we can pull. And when I say we, I'm talking civil society. So I'm talking about central government, I'm talking about local government, I'm talking about business people, I'm talking about philanthropists, and I'm definitely talking about those organisations that I have the privilege of working with, the community housing sector. And so some of the big structural stuff, because no one player has more influence in the New Zealand housing system than central government, clearly for them to be fiscally prudent and careful and making sure that they're delivering maximum outcome for their dollars, it would help if they had more dollars to spend in the first place. And so tax revenue is definitely one of the levers. And I know it's contentious in the New Zealand context. Should we have a wealth tax? Should we have a capital gains tax? What are we doing with death duties and inheritance taxes? I'm kind of agnostic as to where the additional income comes from, but it's obvious when you look at how distorted our entire economy is in terms of where New Zealanders hold their household wealth is disproportionately in non-taxed residential property. And so I'm suggesting that some form of additional tax revenue from one of those sources would be a really great way to fund our way out of our affordability crisis. It's a housing affordability crisis. So somewhere in the system we need to be generating more affordable housing supply in that lower quartile by value of housing to support our key workers into homes they can afford. So the income's important, but so are other mechanisms. And so there I'm looking more to central and local government as a combined entity, and what I'm talking about is inclusionary zoning. So inclusionary zoning is a very, very widespread, well-accepted, normal mechanism across the whole OECD and in many other countries for doing a little bit of value capture when you are rezoning land to turn it into residential housing, and you just capture a little portion of that as for the benefit of the community and transfer that land to the local community housing trust. It behaves like equity, and it provides a continuous supply of new low-cost or free land to the local charitable community housing trust, such that you have retained and recycled affordability in communities, so locals can stay and live and work in their communities even if they're on a low and moderate income. So that inclusionary piece is really important, and it probably needs to be legislated centrally to protect the local governments from litigation and the risk of litigation if they're trying to do it locally, because we've seen that happen and play out in Queenstown recently, and really we'd like to see it across the entire country. So those are two, some more tax revenue for government, some more continuous land supply through inclusionary housing, inclusionary zoning. Those are two levers which could be really, really effectively pulled. And then the third one's this concept of shared equity, where you have co-ownership. And there's some really great examples of that operating at good scale across New Zealand already, where a third-party partner brings some equity to the table. So in some ways, New Zealand Housing Foundation and Te Tumu Paeroa, the Māori trustee, have been working in partnership in that way. And what they do is they bring some money to the table. They support families into independent home ownership. They co-own the house together for a while. And as the family can afford to buy the other party out, they do until they own the whole home on their own. And that's a very elegant, very simple, well accepted by lawyers, well accepted by the banks, simple structure for assisting families on lower and moderate incomes just to bridge that gap from getting out of rental poverty and up onto the first ladder of home ownership. So we're strongly supportive of those products.
So the government recently announced some partnerships with community housing providers. Can you talk us through that and what that means to community housing providers as a whole?
One of the more recent announcements from the Minister of Housing was the selection of 5 strategic partners, who are 5 of our community housing providers who are larger in scale and deemed to be of greater capacity and capability in terms of delivering, particularly on the next 1,000 funded IRRS places. That's a big step up for some of those organisations, and it's going to require them to effectively max out their balance sheets and take on an enormous amount of new debt. So it's a double-edged sword. Being a strategic partner, it's not the nirvana that some people might have thought it would be. It does, however, get us into thinking, well, what about the rest? And how do we support those medium and small community housing organisations to do the best job they can do in each of their unique contexts? Because there's a lot of places with persistent unmet housing need, and they also need to have the ability to do some new supply. The biggest challenge for years in New Zealand stopping small providers from getting those new homes built in their communities that they need to build are twofold. Number one is getting access to finance on terms that work, and the other one is getting access where they can to subsidies and contracts from the government, particularly the income-related rent subsidy. And more recently, there were some really great funds set up. One which was supporting progressive home ownership and shared equity, and another one that was specifically supporting affordable housing, sub-market housing, which is below the normal market rate. And for the small ones, often it came down to them having a really good high trust relationship with their local financier or local bank as to whether or not they would get access to finance that worked. We've seen alarming variations in the interest rates that people were being charged, some close to double digit, 10% or greater, some much more down where you would expect the rates to be as a reflection of a low risk scenario where you've got a 15 or 25 year contract with the government to pay a full market rent. So I'd be arguing there, well, hold on, where's the actual risk and why is the interest rate not lower? And so we're thrilled about the announcements in Budget 2025 and the work that's been going on since the conference in November 24, because the Treasury and the Ministry of Housing and Urban Development are deeply engaged and proactively working with the Community Housing Funding Agency to support them to get a rating. And so within a very short space of time, they'll be banking and in terms of providing debt to over 20 of our members, and some of those members are actually quite small. I believe the threshold was in the low millions in terms of balance sheet requirement, so maybe 3-4 million last time I looked. Many of the 100 community housing providers in the country are in a position or will be in a position quite soon to access finance from the Community Housing Funding Agency at rates that they are unlikely to get from their banks. And so that's quite a significant system improvement. And we're getting to the point now where I'm hoping I'll be able to say with confidence, finance in terms of debt is no longer the biggest barrier to new affordable housing supply in New Zealand.
Any closing thoughts about the future for affordable housing? Are you optimistic?
I'm still very optimistic that we can actually address our housing affordability in a crisis in New Zealand. There are some extraordinary examples of some very, very good innovations occurring across the system, some great products. Secure Home out of Queenstown is a good example. Progressive home ownership and shared equity programs all across the country now being delivered with growing acceptance and understanding within the legal community and the banking community. All the major institutional banks in New Zealand now accept the sort of gold standard of shared ownership, which is the New Zealand Housing Foundation version. It's widely understood and is in hundreds and hundreds of homes across the country, giving families the first home ownership opportunity they've had in a generation. So there's lots of room for optimism and hope within the housing system. I also would say that I believe that pretty much all of the solutions that we need as a country to solve our challenges in terms of affordable housing already exist, and actually all we need to do is replicate them and scale them. So very optimistic about a better future, and central government's going to need to step up and continue to play a growing role, not a diminishing role, in providing solutions, as is the local government. And local government's starting to wake up all over the country and realise, actually, we have significant land holdings that we can unlock in favour of affordable housing supply. Even on a long-term leasehold peppercorn basis, that's a game changer for communities. They control consenting. They control resource consents and development contributions, and can, if they choose to support an affordable housing outcome, waive those or reduce those. They can, if they choose to, accelerate the timeliness of responses on resource and building consents. That makes a huge difference and makes things work better. So central government, local government, business is coming to the table. New Zealanders need to remember that every home that's built in New Zealand is built by the private sector, even if it's for the government. And so they also have a role to play in terms of sharpening their pencils, forming partnerships. And so I'm really genuinely optimistic that if we work together as a nation, we can solve our housing crisis.
In closing, we'd like to thank Paul Gilberd for joining us today. More information on this episode can be found in the description. And don't forget to subscribe to the Char Hub podcast on your favourite podcast platform.